Hi, everybody, and welcome to the August 4th edition of the weekly market wrap. Friday in the summer, a little bit slow today, up a bit, but we're going to get into it and show you what we found here. First thing that we're doing is we're removing a couple of small losers from the focus list. So, the first one is Medtronic MDT. We actually put a tight stop on this one, and it didn't continue to break out to new highs. It actually pulled back and started to go a little bit lower. So we're going to go ahead and close below our 83.75 risk target, and not by much, but down about 6%. The next one that we're removing from the focus list is also Ford. So what's happening with Ford is that we tried to give it a shot based upon an insider buying shares of the company. It went right up to that resistance level and started to pull back in again. So we didn't get a bounce that we were looking for, and we're going to take that off for basically 6%. It's like 5.9 something percent. So two small losers, nothing tremendous, but you have to respect the risk tolerance. And part of the reason why I kept them a little bit tight was as we were adding these companies, we actually were extended on the overall market. So by keeping your risk parameters tight and letting your winners ride, what it essentially does is as it filters out the losers, you'll eventually start to have a way more winners in your portfolio making you money than losers just keeping your fingers crossed and hoping that they turn around. So it's part of the process. It stinks if you're in it, but it's just a necessary evil to get rid of the weaker performers. So to move on, we're actually adding a company called Hilltop Holdings. Trades on the New York Stock Exchange under the symbol HTH. What we're looking at here is a monthly chart of HTH. We're adding this at $25.85 a share, and we think it can get back up to right around where it was just in January, around 31 bucks a share. Now, what's happening with this company is we're seeing the director purchase about a $500,000, $499,320 at $24.97. So he bought his shares right about there. Now, he bought these shares on July 31st, and I looked at his previous purchase. So I went back and I looked and I saw that the last time that he bought shares of this stock, it was trading around 19 bucks back in 2015. So he stepped in um, back at that time, and it was right around this level. Within 3 months of his purchase, the stock went up by 31%, and now it's obviously higher than where he bought it then, and he's actually buying about 50% more at a higher price. So essentially, we see long-term monthly chart, an uptrend. We have him buying higher than he previously purchased, and his previous purchase was successful. So those are the reasons behind. I know you got a lot of lines on this one, but those are the reasons that we're putting it on the focus list. They're a regional bank. They have branches in Texas, California, Florida, Ohio, Washington, Arizona, Maryland, and North Carolina. So pretty decent sized regional bank. A lot of times with these smaller regional banks, we tend to do quite well with them. So I wasn't afraid to add this one. So moving on to the overall market, what we saw this week was this is a daily chart of the S&P 500. Or the ETF spiders, which is exactly the same thing. So what we saw here was consolidation, trading in a range for basically the last 2, 3 weeks, and we'll see which way we break out. I mean, it's possible that we could break lower, but if it continues to do what it's done over the past months, years even, we tend to consolidate, break out, consolidate, break out. So we'll see if that trend continues. If it does, great. If it doesn't, we'll act accordingly. So one of the things that I always want to do is I always want to make sure that we're not predicting, we're reacting. And by doing that, it actually allows you to put yourself in a position where you're not missing out on big runs or staying in things that are just beating you over the head every 5 minutes. Because um, I talk to a lot of people about this. If you think, and a lot of people do, because I've spoken to a bunch of you, if you think that the market is going to drop pretty big, this is the highs, this is it. I get it, okay, because it's been higher from where it has been, okay. It's now higher from where it has been, I should say. So if you think this market is too high, and you think there's a 30% correction coming, fine. Don't do anything until the market drops 5%. And what that essentially does for you is that, yeah, I realize you're either going to lose 5% in the longs that you currently hold, or if you're looking to short the market, you may not make the first 5%. But if you're right and this market drops by 30%, it's much safer to try and catch the last 20-25% of that move than it is to try and catch the first five. So what I'm saying is let the market tell you what's happening rather than you try and really exert your opinion on the market, because the second thing doesn't work. You can't exert your own opinion on the market. Your opinion doesn't matter. I hate to tell you that. My opinion doesn't matter either. It took me a little while to realize that, but when I did, it became very profitable for me. So keep in mind what we're trying to do. React to what insiders are doing, react to the demand of the market or the supply of the market, um, and know that a lot of times these trends will carry for years and years as we continue to move. So it's kind of like the same thing from 2009 till today, huge uptrend. From 2008 till 2009, pretty big down market, obviously, and from 2003 to 2007, another big uptrend. So um, didn't want to make it too long this week, but let me get right into one other thing, and then we'll wrap it up. So Tesla. So if we take a look here, Tesla came out with earnings. We added it back. So this is kind of how it worked. We got in at 262. We rode it up to about 360. We made 35%. We saw it drop down to 314. We added it at 314. Now it's up at 360 again. So we're up another 15%. So in this particular one, I don't know why we're trading it well, but I'm just following what the insiders are doing. In the last 4 months, we're up about 50% on Tesla. So I'm trying to stick with it this time because I'm seeing higher lows and I'm seeing a breakout. And Elon Musk is still very positive. Obviously, it's his own company, so I don't expect him to be too negative. But if we can breach these highs up here, that gets us to 400. And there's actually a possibility with these two trades that we could be up 60-70% combined on both of them. So that would be a nice little winner for us. So far, so good. Um, like I said, just react to what's happening. Don't predict. I was speaking with somebody recently and just kind of using an analogy that, if you're worried, bring an umbrella, but don't open that umbrella unless it starts to rain, and that's kind of the same thing. So I appreciate you guys tuning in again, and we'll talk next week. All right, thanks so much.